So, good morning, everyone. Let's get into it because yesterday was one of those market days where the headline numbers looked calm, but underneath, a lot was going on. Hey, everyone. It's Thursday morning, February 12th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's get started. U.S. stocks were basically treading water yesterday as investors tried to make sense of a January jobs report that honestly came in way hotter than expected on a monthly basis. The data showed that the U.S. labor market is still holding up surprisingly well, even though last year's numbers were heavily revised lower. And that combination is keeping the pressure on the Federal Reserve to stay patient with interest rates. Looking at the markets, the Dow Jones Industrial Average slipped by 0.1%, pulling back slightly from its record high. The Standard & Poor's 500 hovered just below flat, while the Nasdaq Composite also dipped around 0.1%. Now, the big story was the jobs report. The U.S. economy added 130,000 jobs in January, according to official data released yesterday. That was much stronger than many investors expected after a rough stretch of labor market numbers. The unemployment rate edged slightly lower to 4.3%, down from 4.4%. But, and this is important, that strong monthly number came with a catch. Revisions to last year's data showed that total job growth for the year was just 181,000, a massive drop from earlier estimates. That makes it the weakest annual job growth since 2003, outside of a recession. So what does that mean for rates? Well, this mixed picture is reshaping expectations. After some softer economic data late last year, investors are now increasingly betting that the Fed could keep rates unchanged for longer. Markets are pricing in more than a 40% chance that rates stay on hold through June, although most traders still expect 2 rate cuts by the end of the year. Earnings also stayed in focus. McDonald's reported after the close and delivered a strong quarter. Revenue in the fourth quarter came in at around $7 billion, up roughly 10% from a year earlier. Net income rose about 7%, and earnings per share jumped 8%, showing that consumers are still spending, at least on burgers and fries. Elsewhere, Kraft Heinz said it's pausing its planned spin-off. And after the bell, Cisco reported earnings as it steps up competition in artificial intelligence networking against some of the biggest names in tech. So overall, yesterday was a reminder that the economy isn't slowing in a straight line. And that makes the Fed's job, and the market's job, a whole lot harder. All right, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.